morning, everyone. I'm Clara Petalou with Larkspur Business Brokers, and today's tip for selling your business, putting yourself in the buyer's shoes. It's really important to understand what the buyer is facing when they're going to get a loan, and it's really important to understand that it's not just the buyer that the banks are looking at. When the banks look at lending on a business, they're essentially looking at three components. They're looking at the strength of the buyer, that's of cash as well as experience. They're also looking at the strength of the business. And the third thing they're looking at is the market or the industry that the business is operating in. So it's not necessarily entirely on the buyer. The bank wants to see really strong financial statements from the seller. That means financial statements that can afford a debt repayment and as well afford to pay the owner operator, the new owner, a fair market wage or salary, what have you. So it's important to know that, the buyer is going to go to the bank. I've even seen situations where the buyer had so much cash, was able to purchase the business without any lending, but still wanted that loan. But the buyer didn't have the experience that the bank wanted to see in that particular industry. And so they said no to lending on that business, which put the buyer in the position of having to either pass on the business or to pay for the business entirely in cash. It really, really does depend on a case-by-case situation, but I can't emphasize enough how much things have changed in the lending arena. Banks right now are expecting sellers to finance a portion of the sale. And this is especially true for businesses that are generating under $1 million in annual sales that are owner operated and that will be sold to new owner operators. Seller financing is a way for the bank to obviously mitigate its risk and put that risk back onto you, the seller, and back onto the buyer. So more cash is needed by the buyer. The bank expects the buyer to have anywhere from 30 to 35% cash down, and they're expecting the seller to finance a portion of that as well. So if seller financing is something that you're adamantly opposed to when selling your business, it's going to be hard to find the right buyer to purchase that business all cash. It's something to really consider and to prepare yourself for, that seller financing is likely inevitable if the buyer is going to qualify for a loan. If your financial statements are really strong, you have a really healthy business that's performing well, that would be able to not only service a debt, but also pay the owner operator a fair market wage, your business is in hot demand. There are buyers chomping at the bit right now to buy businesses like yours. So now would be an excellent time to sell because there are so many buyers looking for strong businesses. If your business is maybe a little bit distressed, not performing as well under COVID, you might want to factor in another year, 2 years for you to really hone in on your financial statements, to remove all non-business related expenses and to ensure that you're demonstrating that you're getting paid, whether it be on salary or dividend or wage, to be able to demonstrate that not only to the buyer, but to the bank, so that the bank can see that the business is profiting and able to pay its owner as well as pay for the debt. So these are really important steps when selling your business. To be prepared for. It's not always because of the buyer, it's because the banks have really tightened up their lending. So I thought that this would be important information for you to know if you're thinking about selling your business and to understand what buyers are looking for right now and more importantly, what the banks are looking for. If you ever have any questions, don't hesitate to reach out. I'm always happy to share information with you. I'm Clara, Larkspur Business Brokers, where better deals happen.